Hey everyone, and welcome back to the channel. Today we're going to know if NFTs are still a good investment. Let's get right into it. Non-Fungible Tokens or NFTs are a hot topic in the cryptocurrency community, and not just because of their prominent role in digital art. Nike Inc., Louis Vuitton and Coca-Cola Co. are all experimenting with NFT creations. Here's what else you need to know about NFTs and how to manage them if you want a piece of the token pie. NFTs are non-fungible tokens. Now, fungibility refers to similar assets that can be traded interchangeably. Bitcoins, for example, are fungible in the sense that users can exchange one Bitcoin for another and receive the same asset. Because NFTs are non-fungible, each token is one of a kind and cannot be replicated. Because of this distinguishing feature, NFTs are represented as unique information on a blockchain, ensuring digital ownership integrity. Because its existence is timestamped on the blockchain, this record of original ownership cannot be changed. Each NFT denotes a physical or digital asset. Apart from art, this can include anything from intellectual property to a title of ownership to an asset. Nick Donorowski, CEO of blockchain technology company ORE System, said, "NFTs are pieces of information on a blockchain that's represented in an interactive format with visual representation. For ownership rights, if you purchase an NFT early, that asset is limited and only available through you. This scarcity, Donorowski says, is what allows for the value of the NFT to grow over time. NFTs are powered by smart contracts. Specifically, smart contracts are the function that manages the transferability of NFTs. Donorowski then added, "If you think of blockchain as a computer network, the smart contract is the computer that runs the website." In the context of digital art, NFTs are particularly well known. NFTs are created by artists and can be traded on platforms such as OpenSea. Building on their success in the art world, NFTs have expanded into gaming, retail, real estate, sports, and other industries. As the utility of NFTs grows, so should their adoption and popularity. NFTs are distinct because they have proven ownership that cannot be replicated or manipulated. When an item's supply is limited, it gains value. The NFT market is speculative, with people buying NFTs in the hope that they will be more valuable to someone else later. As a result, people are collecting art NFTs in the hope that they will be valuable in the future. The traditional investing principle of buy low and sell high also applies to NFTs. Market participants can buy NFTs early and sell them later for a profit if interest in the token grows. However, Daniel Strachman, managing partner of ANC Advisors, says NFTs should be thought of as an investment that could go to zero and is pure speculation. NFTs are not like stocks or bonds in that you have a quantifiable idea of the investment's intrinsic value in addition to its market value. They have a market value that is solely determined by what the cryptocurrency community is willing to pay for them. Knowing that NFTs are risk assets, investors need to determine the right level of exposure to them. You would have a certain amount of money that you would put into your risk capital bucket, and that would be what you are willing to go to 0 or 100. Another way to think about exposure to NFTs, Strachman says, is if investors have exposure to cryptocurrencies, NFTs could be a subset of that exposure. Experts say your individual long-term investment goals should determine the type of NFTs you want to look at. Donorowski said, "You have to find NFTs that align with what your portfolio growth strategy is, just like any other investment. Some NFTs can provide investors with greater growth opportunities, depending on their applications. Some NFTs can provide investors with greater growth opportunities, according to Donorowski. NFTs with real-world utility, such as real estate contracts, will eventually gain in value." Is it worthwhile to invest this year? The NFT market had a breakout year in 2021, and interest in this digital asset class remains high. According to chain analysis data, collectors in 2022 have sent over $37 billion in assets to NFT marketplaces as of May 1st, easily exceeding the total of $40 billion sent in 2021. You've probably heard of NFTs through pieces of art that have fetched high prices at auctions, but because they are based on smart contract technology, their utility extends beyond collectible art. The NFT marketplace is still in its early stages, and transaction activity has slowed in recent weeks, but investors, institutions, businesses, and celebrities are all still interested in learning more about digital tokens and smart contracts. If investors understand what an NFT is used for, it can be a legitimate investment. Research is the most important thing investors can do before entering the NFT market. They should approach this task in the same manner as they would research a stock or bond. According to Strachman, market participants too often follow a craze, which is good for those who sell assets, but bad for those who buy them. Investors should understand what they are getting themselves into in order to make better decisions. If you want to buy one, you can now do so through any NFT marketplace and some cryptocurrency exchanges by purchasing assets that have been tokenized into NFTs. Many NFT marketplaces such as OpenSea are hosted on the Ethereum platform, and purchasing an NFT may require you to own Ethereum. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we'll be sure to catch you all in the next one.